Well, yes, KPIT Tech is surging in trade up around 12% after the company managed to beat estimates when it comes to the Q4 performance, as well as they talked about a stronger FY23 with a good guidance coming in. Let's start with the Q4 performance, wherein the dollar revenue jumped up by 4% sequentially to come in at $87 million. And even if you look at the constant currency growth, that continues to be very healthy at 5.2% sequentially. EBITDA margin is something that the company has not only managed to maintain despite the supply side headwinds. In fact, they have managed to expand their margin profile as well. So the EBITDA margin came in at 18.6% versus 18.5% on a quarter-on-quarter basis. And also, if you look at EBIT margins, they have expanded by 40 basis points sequentially. Profit figure is much better than expectation at around 79 crores, and this compares to street expectation of anywhere between 70 to 74 crores. And the reason is that there was a higher other income this time around, and that's the reason the profit figure is looking very strong. Separately, the TCV pipeline looks healthy. In fact, in this quarter, the company has delivered a strong TCV deal pipeline of $125 billion, and they've also signed one large deal with an European OEM manufacturer for $70 million, which will trickle in over the course of next 5 years. For FY23, the management has guided a constant currency growth of 18 to 21%. They are talking about broad-based growth across practices. Volume growth is likely to be in range of 25%, with the EBITDA margin profile being 18 to 19%. However, they too talk about that supply side pressures are likely to continue in FY23. The stock is not cheap. Remember, on a forward earning basis, it is trading at 35 times forward earnings. But very recently, the stock has retraced all the way from 800 rupees down to 600 rupees thereabout. So that's the reason perhaps we are seeing a tad bit of a spike in the stock price today.